Hi, you're watching Investor Insights and welcome to the real estate series. This is a series of videos that I'm going to make that's going to highlight the real estate bubble that's brewing and that's going to implode in this country of ours. First and foremost, the first video should be actually titled, Is this a bubble? And realistically, if you ask anybody out there who owns a home, who is looking to buy a home, or owns an investment property, they're going to tell you there is no bubble. The realtors will tell you that there's pockets of value and prices are fair, and they're expecting much more gains over the long term. Now, I like to dispute all that, because essentially I always believe that if one lives within a bubble, it's very hard to see outside of it. It's like trying to describe a pizza if you're just an olive in the middle of that pizza. It's very hard to see the overall picture. If you want an astrophysical description or analogy, it would be like trying to describe the Milky Way by being inside of it and trying to describe it from an outsider's point of view. It's impossible. And just as we are living within a real estate bubble, a stock market bubble, and a bond market bubble, people believe that these are normal times, whereas you're living in extraordinary times of artificially suppressed interest rates. That in itself, all that loose monetary policy, is fueling these asset bubbles. But let's just focus on real estate, which is our the name of this series, and identifying the bubble. Well, how can you tell if things are not quite all right? And if you keep on believing what realtors saying, or the financial commentators on Bloomberg or CNBC are telling you every day, you have to follow your brain and not your heart, because your heart is always going to follow the rest of the herd. Now, within a bubble, prices just keep on inflating and inflating and going up and up and up every day, and people just keep on piling in because of primarily two reasons. One is they see everybody else make money, so why shouldn't they? So without doing their own research, without looking at the possible returns and the downside potential, they jump into a trade. In this trade, it's possibly the biggest financial asset that they're ever going to put their money into, and they don't do any research except looking at what everybody else is doing. The second thing is fear of failure. So if everybody else is making money and you're not, then you have to do something to catch up with everybody else. It's slightly different from the first, but they're on the same lines. So when you've got asset prices, in this case real estate, which is escalating at basically a geometric rate. Real estate prices in 2013 across Sydney have risen 12%. And the weekend that Tony Abbott got elected, the realtors came out and said that the auction clearance rates reached a multi-year high. I think it was in the mid 85%, and they expected house price appreciation in 2014, so this year, to be between 15 and 20%. Now, if somebody was to tell you that the stock market was going to get up 15 to 20%, you'd be calling it a bubble. If you were told that bond prices were going to appreciate 15 to 20%, given the circumstances, you'd think that it was a bubble. And real estate is no different. So immediately, one of the first signs that you're living within a bubble is that unrealistic expectations become the norm. And when you start chasing those expectations based on things like the biggest fool theory, so buying something in the hope that a bigger fool is going to buy it off you at an even higher price than what you paid for it, is going to end in disaster when one finds out that he's the biggest fool, and there's nobody else to sell to because he's already paid an exorbitant amount of money for something which is clearly not worth it. So the signs are, everybody's talking about it. The newspapers, every other day, front page, page 2, page 3, page 4, page 5, there's something about real estate. There was something recently about the Fairfax mansion being mentioned in the even CNBC as being the most expensive house in Australia, valued at about $110 million. Well, if you're dumb enough to spend $110 million on a property, well, you deserve to lose it. But essentially, it's the hype. Everybody wants to get into the trade. And so as price escalates, it spawns a whole new industry. Namely real estate. You've got brokers, mortgage brokers, and you've got bankers, and whole new home loan divisions being sprouted up, and whole new even lending institutions being popped up. Take a look at, just for example, out west, for anybody who lives around the southwestern region. If anybody knows Canny Heights at all, 3, maybe 4 years ago, there was not one real estate in Canny Heights. Today, I can count 6. I can be wrong in that I'm actually too low, but that's how many I can count just by driving past. That's telling you that the whole region is just founded on just real estate appreciation and the buying and selling of real estate as a means of the area's productivity. So a healthy economy should be producing goods and services. Well, that area is just making purely its economic development based on buying and selling of real estate. And that can't be good for the long term. If you walk into a butcher's and it starts to give you stock market tips, if you get into a taxi and the taxi driver starts to give you stock market tips, you know it's time to sell. Real estate, it's the same thing. When people start talking about how much money their house is making you and how proud they are of having bought when they did, even though it could be very recent and they're still experiencing large capital gains, the end can't be that far away because you're in a euphoric phase. And if anybody knows anything about markets, the only way to make money is to buy when there's blood on the streets and sell when there's euphoria, not the other way around. So as this euphoria grows and grows, and the realtors expect real estate prices to climb 15 to 20%, but yet at the same time wages aren't growing 15 to 20%. In fact, unemployment's going up, so you're more likely to see wage actually losing out to inflation in the short, medium and long term, rather than catch up with house price appreciation. And if you even look at house price appreciation, the price itself, the Sydney median house price of late was $722,000. And if the per capita income is roughly around about $44,000 US or 48,000 Australian, you're looking at a number of 15 times annual wages for the cost of a house. Now, if you don't really get your head around numbers, imagine not having to pay tax, not having to eat, drink, clothe yourself, entertain yourself, or spend any money except take your entire average wage. It would still take you 15 years to pay off a house. If you don't call that a bubble, I don't know what you would call that. Those numbers are so far out of whack. It doesn't make sense to buy real estate in this country. It doesn't make sense when the median house price was $600,000, and it didn't make sense when it was $550,000. So why should it make more sense now? And why is everybody piling in? Just because affordability is maintained due to loose monetary policy, so you've got RBA rates at 2.5%, the economy is struggling. So how can people afford any rates of interest higher than where it is now. So when inflation runs and the RBA is forced to hike rates, not because they want to, but because they have to, you're going to have a huge wave of defaults. And with defaults comes mass selling. And then when people see everybody sell and they realize that they're looking at a gross capital loss on their hands, they follow suit. So they bought in euphoria and sell when there's blood all over the streets. That's the easiest way to lose money. And one of the funniest things that you're ever going to hear when you're living within a bubble is that returns don't matter. Because all that matters is capital gains. And you know the end game must be close. Because with stocks, they say earnings don't matter. Price will just keep on going up. With bonds, yields don't matter because the Fed's buying them, so the price is just going to go up. And with real estate, it's essentially rent. When they say that rents don't matter, the price is just going to keep on going up. You know that's an even bigger telltale sign that you're living within a bubble. Because to the investment community out there that buys real estate for investment, you're looking at rent yields for a house of 4% or thereabouts, for unit yields of around about 5%. And when you look at what the real rate of inflation is, which is closer to between 5 to 10%, then you're actually losing money renting a house out to people. You've already lost a whole year's rent when you buy a unit or a house and you pay the stamp duty on it. You're already behind by 1 year. And then once you factor in the maintenance and repairs and the payment of various duties and taxes involved, you're going to make a whole less than inflation. So you're losing. I cannot tell people what to do when it comes to real estate, because it is our forefathers who taught us that you should put your money in bricks and mortar. But it all comes down to timing. And if you want to time the market as to get in now, if you've got some money saved up, if you're looking to get in there in the near future because you believe that interest rates are going to be at these levels till the end of days, then you're in for a rude shock. People don't remember history. And if you look at Japan, you look at Hong Kong, you look at the US, people have forgotten those. And the US was only 6 years ago. So I'm going to dedicate this series to looking at the real estate bubble in Australia. And hopefully I'll be able to guide you through this mess so you don't make the same mistakes as the Japanese or the people from Hong Kong and the Americans did all those years ago. But if things continue unabated, you are looking at a crash that's going to make essentially the crash of 06 and 07 in the States look like a walk in the park. Because don't forget, their real estate went up 80% unabated for 3 years. Real estate went up in Australia 350% since 1997 to now, unabated. So when the correction comes, you're looking at even bigger drops than what we've seen in the US. Just because a bubble has lasted 5 times longer in Australia than it did in the States doesn't mean it's not here. So until next time, be aware that you are living within this bubble.